Hello everyone, and welcome to this market breakdown. There's a very good reason why I've decided to make this video, and that is because I noticed that there are a lot of things that traders do wrong, and they tend to miss out on some very key details when looking at the chart, when doing technical analysis or carrying out technical analysis, or and this doesn't have to do with your strategy. It doesn't have anything to do with the strategy you're trading, or whether you're trading smart money or you're trading retail. It doesn't have anything to do with all that. What it has to do with is paying attention to the smallest details that you're possibly going to find on the chart, and that is what we're going to look at here. So right now I have in front of me Euro Japanese yen, and this is looking at the market on the weekly time frame. And please, before I continue, my name is Hosanna Chikwado. I'm the founder of Chikwado FX, and I'm inviting you to subscribe to our channel here on YouTube and give this video a like. Please don't walk away without giving the video a like. It helps the algorithm of YouTube, put us in front of search, and it shows that people like what we're giving, and then helps YouTube to put us in front of more people. So please don't forget to like, don't forget to subscribe. So let's jump right into the chart. Now, looking at Euro Japanese yen on the weekly time frame, as you can see, to the very obvious eye, initially what I would do earlier on was that when the market moves like this, maybe I'll take a chart pattern, I'll take a trend line and then draw it. The moment I see that it has three touches, 1, 2, 3, just like typical of what we might have here, 1, 2, 3 here. The moment I see that we have that, I'll be expecting the market to sell all the way to the lows, and that is not completely the case. That is not how the charts work. That is not how the market works. And me doing that, or you doing that as a retail trader, means you're trying to get the market to do what you want, instead of trading the obvious thing that you have in front of you. And the very obvious thing that you have in front of you is an uptrend, followed by this one that one impulsive move that broke this structure here. We pulled back, created this high, broke through the high, pulled back again, and then we are in a big rally right now. So now, obviously, we're in an uptrend, and you don't want to trade against that, irrespective of the fact that you can catch some very good moves on lower time frames, because this is a weekly time frame. So you can catch some very good moves to the downside on lower time frames. But if you're trading that, there is something you must pay attention to. First of all, looking at the chart here on the weekly time frame, we have this high up here, which the market is yet to test, and we also have this big order block here, area of supply, depending on how you call it, area of supply that the market is yet to trade into. You see, the market is yet to trade into this red zone. This order block is completely untouched, like completely unmitigated. So there is no way in hell that the market is not going to come back into this zone sometime in the future. We don't know how fast that's going to happen, but we know that the market is definitely going to come up to this area. But now, if the market has an unmitigated area, do you think, just with common sense, that the market is going to come all the way down after having to break through this, not just this structure? The market broke through this structure, broke through this one on the way, broke through this one on the way, and canceled various levels of structure along the way just to get to this point. I think it would be completely naive for you to think that the market is suddenly going to start selling off big time. We can get some slight corrective moves, but the slight corrective moves will be to push back into whatever order block or whatever demand zone that bettered this move to continue this move to the upside. That is more probable. That is that has a higher probability of happening than the market actually just tanking from that side, or just tanking from the top here all the way to the downside. We're eventually going to sell off, but of course not until we are done mitigating what we have here. So this is just looking at the market on the weekly time frame. We see that we're far from this high. We have about how many pips from this point? We have about 300 pips, 350 pips to this. We are 350 pips away from that high. And from what we know, from what experience has showed us that the market obviously will always take out highs, will always take out lows. So sometime in the future, we know that we are coming to take out this old high. from January 2018. You see, we had this high here, and then now we are taking off on the market. Now we go down to the daily time frame, and it was in the process of, you know, analyzing this that I decided to make this video, you know, because first of all, if you want to draw, let's say you want to draw your pattern, you can draw it this way. And if you draw it this way, you have this 1, 2, and then you're waiting for something to touch this area. But then, like I told you, the market is not going to fall away from any level just because the pattern has 1, 2, 3 touches. You know, if you're going to count it that way, you can see many 1, 2, 3 touches, 1, 2, 3, 4, 5 touches everywhere. And then, like I used to expect, then the moment the market breaks a high, just like we had here, I'm ultimately expecting the market to completely tank, and that is not the case. The market can break a high, pull back, and then come through to break that high again. So you can draw your structure like this and then think that, okay, fine. I am not criticizing chart patterns. I still use chart patterns a lot, but I'm just telling you that there is more detail for you to look at when you're looking at the chart. There is a whole lot more detail for you to look at, rather than just, you know, you put 1, 2, you just plot this line like you have here 1, 2, and then when you get here, you're going to just sell the third touch and ultimately expect the market to go this far. And then when the market does something as small as this and then pushes against you and then comes and stops you, you start to wonder like, oh, why is this happening? Like, what's wrong? You know, I used to think like maybe something was wrong with the strategy or not, but then I started to find out that in these areas here, this ascending structure here, there are very, very, very important details that you cannot afford to miss out on. And as you can see, I've drawn my chart pattern, but then I want to get into the smaller details. And I drop down the time frame. And when I drop down the time frame, I want to look at each market structure for what it is. Okay, let's clean that up. I want to look at the market structure and the structure of the market for what it is. Now, what is the market structure showing me? Here, I have a high, then here, okay, let's set this. There was a high here, then there's a high here, then right now there's a new high. That's the most recent high. Now, when you're looking at the structure of the market, please try to identify what is the area that broke through. Like, for example, we have this high here. If we look along this line, we will notice that the most recent structure that broke through this high is here, that caused the break of this high. That means this high here was broken by the action of this zone here. And then we had an impulsive move that broke through this. And then you saw the market come back to test it. You know, people trade this as break and retest, which is actually not a bad strategy. And then when the market broke through that, we tested it again, like we had here. This action, this high was broken by the demand here, which caused this rally, and then the market pulled back, and then created this high. But now, when you look at this structure, this area here did not break this high. Whatever it is that broke the high we have here that I'm marking and highlighting right now on my chart, this recent high, okay, let's just name the highs. So let's see, high 1, high 1, high 2, high 3, and then we have the 4th high here. Now, whatever it is that you're looking at, that whatever action you see on your chart, we have this first high, this second high, the third high, and then the 4th one. Now, the actions of, let me just take this away. Now, whatever it is that this second high here that I have high 2 that I've just highlighted and denoted as 2, now was not broken by this low here. This low did not just come down and then take off and break the high. No, it did not break the high. This that broke this high came from this zone. And when we mark on this zone, we see the impulsive leg that followed this demand zone that broke this high before we had a relief in price. Now, of course, this move here that happened around here came up and created high 3. Now, this 3 looks very terrible, honestly. Okay, I think that's a better 3. So, came up and created high 3. Now, we have high 3 in front of us, but high 3 was not broken by this area here. It was broken by this area here. Now, that brings me to what I want to talk about. Okay, let's delete all that. Now that brings me to, let's just, as long as market structure, as long as price, if you notice, this is the high, that this is the structural level. Let me get rid of, I think it's double marking itself. So now this is the level of structure. Let me mark on this area here. This is the level of structure that broke through high 3. You see this demand zone as we have it here. Let's make that green. Now let's make that green, so it's you know obviously that is a demand zone. So support here. So now this green zone here bettered the break of high 3, and now we have high 4 in the market. Now as long as the price, the market remains above the structure that broke high 3, that means as long as we have price sitting above this area, above this high here, above this low here, sorry, okay, as long as we have price sitting above this low here, which gave birth to the break of this high, we are going to continue to look for bullish moves to the upside. Now that means until we violate the low that gave us a break in this high, we are not going to be looking for any type of sell structure, any type of sell market. Now why I'm saying this is that this comes from tons of experience and a lot of losses in the market, and then you take a loss, you don't know what's happening until you actually go back and start to sit down and study price and study the market. Now I've highlighted this first high, 1, 2, 3, 4, and now each of these highs you see in the market was broken by something, and it was broken by, you see, high 1 was broken by this demand, high 2 was broken by this demand, now high 3 was broken by this demand. Now wherever the market is going to create the next demand that will break this high 4, if we are going to break that, remains to be seen. So we could come in around here, take some orders from here, create whatever candlestick pattern or whatever it is, and then come through this high again. If we come through this high again, we are not going to be looking for sell until we break through whatever it is that caused the high 4 to break, and then at that point we can say, okay, right now we are looking for bearish moves. So this is the core of the market. These are, as you can see, I didn't just start just okay, this is a pattern, and then maybe initially what I would have just done would be, I'll take a trend line, connect this, then take a trend line, connect this, like I used to do, and then by the time you do that, you just wait for a break of the trend line, and then when you wait for the break of the trend line, when the trend line breaks, you take the short trade. But unfortunately, when you take most of those short trades, you find out that it just comes back and stops you out. You're taking lots of losses, and you cannot explain why you're taking lots of losses. So probably when I looked through data, I noticed that I was taking losses against the underlying trend and not even understanding what is leading to the uptrend, what is pushing to the uptrend, pushing the uptrend. So right now, as you can see, I've just explained using a very, very simple analogy and just showing you that we have these highs in the market. You must respect any area that causes a market structure to be broken, like we have here. Any area that breaks it, which is what we have in this zone, that area must be respected in the market. And that is why there is just, I took a very long break from the YouTube channel just to make sure that whatever content is, because I mean, I found great value on YouTube. Like, I've become the trader I am by being able to look at the charts for a very, very long time, and not just look at the charts. I found some very valuable help from people on YouTube, and it was all for free. All I needed to do was just get into the charts and try to validate what they were saying, and validate it for myself and get my own opinion and all that. So that is what we are looking at on the chart, and that's why I decided to bring this content for free here on YouTube. I'm not going to say, oh, pay me X amount of money, pay me this amount of money, and all this kind of thing. It's here on YouTube. Though sometime in the future I might have a premium course, I have a premium signal services already. So, but at the moment there is really no need to not give this out for free and just put this information here, because I found great value on YouTube. I found great help from YouTube, and this is my own way of saying a big thank you to all the traders that have helped make YouTube what it is. I've had a lot of traders that I've watched here on YouTube, you know, watching guys like ICT, MentFX, Mark Hutchinson, especially. I learned a lot from Mark Hutchinson, and you know, the founder of Falcon Community and all those things. I mean, there are a lot of traders that have really inspired me. Nick Sean, you know, a whole lot of traders have really come together to, you know, make me what I am. And if you know, I could get that for free, I mean, I have a responsibility to also put something out there for someone for free. So that is what we're doing. That is why we're here. So right now, this is what the market looks like. This is the most recent low. This is the major low in the market, because it bettered the break of this structure here. It bettered the break of this market structure that I just marked on with the yellow line. So this is the low that we are working with, and until we break below the low that broke a high, we do not look for sell trades. So if we break below this low, we can say, okay, fine, whatever pullback it is, then we can start looking for those selling opportunities. But at the moment, we are still above that, and if we go down the time frame, you start to see, you know, you start to see more price action and things like that. You start to see more things coming from price. You can see this descending, you know, channel here, this descending structure, and then you have this level here. Now this is looking at I don't know why this stuff keeps shaking. So now this is looking at the market. This is looking at what we have, and now by the time we have the market pull into this area, we have the market sell down into this area, we are not going to be taking a buy because suddenly the market touched this place for the third time, and then we are just expecting it to explode to the upside. That is not why we are going to be taking the trade. We are going to be taking the trade because we have a demand zone looking left. We have, let me just mark that up immediately. Let me just mark that up. Okay, if you look at this area here, you see you have this unmitigated zone. Let's make that green. And if you go down the time frame, I'm sure you're going to see, you can see how this, oh Jesus, you can see how, you know, this beautifully just aligns itself up. You can see this zone here, you can see that candle there. You know, this was the last down move before even this structure was broken. It broke this structure, and then it broke multiple structures along the way. So it is not just trading chart patterns, but right now it is combining it with the areas of liquidity, the areas that matter in the market. And now by the time you take this line, by the time you take this and you push it all the way here, you will see that it aligns with this 1, 2, 3. So now whatever action that happens here will be reacting to this demand zone and not reacting to the trend line. From this point, once we get that reaction, we can now say, okay, good, I think we have a very valid reason to now start looking for buying opportunities, which of course we are going to anticipate that we are going to test this high again and break this high again. So that is what we are looking at here, you know, on Chipotle FX for the week. So guys, with that, I try to keep the video as short as possible. Please subscribe to the channel, like I told you, like I pleaded with you earlier, subscribe, and don't forget to give this video a like. It really goes a long way in helping tell the algorithm that, you know, that we know what we're talking about, and then we're not trying to, you know, that people like our content. Then when people search for similar topics or similar stuff, then it, you know, it puts us in front of the world. So please subscribe to the channel, give us some love, give us some like, and then, you know, I'll see you on the next one. More free content coming. Please, the link to the free Telegram channel is going to be in the description, where I share my chart analysis. You know, people requested for more chart analysis, so what happens in there is basically chart analysis. You can study all the past works I've done, all the things I've done in the past, and then use that to grow yourself and, you know, get better as a trader, because that's what we're here to do, build a community of very healthy and profitable traders. So thanks a million times, guys. Cheers, and I'll see you on the next one. Okay.